Hello and welcome to this first session of the Advanced Financial Management, which is previously known as Paper P4 for the September 2020 examination session. My name is Luqman Rafiq, and I'm actually going to share a brief background about myself. I've been in teaching profession for more than 12 years now, and I've been teaching various courses for the various qualifications, including performance management, audit, financial reporting, financial management, and obviously there are advanced versions like advanced financial management, SBR, advanced audit, and the advanced performance management. So I've been teaching these subjects for more than 12 years now. And I've been teaching similar type of subjects for the other qualifications like CIMA, for ICAW, for ICAP of Pakistan. So this is what I have been doing in the past. A lot of you people would have seen my profile on the ACCA global website also, because I have conducted webinars for ACCA, papers AFM and AAA on several occasions. And the last 3 webinars out of the total 4 webinars for the paper AFM that were conducted, they were being conducted by myself. And so I'll actually be, I'm actually the tutor for this paper. And this is what my brief background is. So when we are actually going to move on to this P4 Advanced Financial Management syllabus, so let me explain to you something. That when we talk about the optional examinations, you've got the 4 choices amongst the optional examinations, where AFM is there, APM is there, ATX is there, and AAA is there. Usually what happens is these 2 subjects, the AFM and AAA, are the 2 most common choices amongst the students. The students have actually stopped taking this APM and they've actually usually stopped taking APM because of the lower passing rate. And a lot of students take ATX paper because of the ICAW. But still, the most commonly used combination is the paper AFM and the AAA. And if I tell you about this AFM paper, so what is important to know is that the AFM paper is one of those papers which I think if you have not studied, so you are going to be considered as an incomplete finance professional, because the things that you actually do study at the FM level, which is the financial management level, those things are a sort of a basic things which actually give you basic financial management knowledge. They're not the advanced level things, and the things which you actually study at the AFM level, these are the things which actually come into the real life also. You come across a lot of things in the real life which are actually tested, which are actually being taught at this AFM level. So what I'm actually going to do is that I'm going to have a quick discussion about the syllabus, about the background to this AFM paper, and I'm going to help you understand that what is it actually going to be the thing which is going to help you go through the AFM. So I will have a question and answer session also, but right now I think the first and the important thing is that I should get you through this AFM introduction, and then we can have a question and an answer session. So the first thing is that this is the relational diagram of the paper, and if you can see, so I think a lot of you people do understand that there is a direct connection with the FM, the financial management paper. And obviously there is a connection with the management accounting paper also. Now, why is there a connection between management accounting paper? Because a lot of basic concepts that we study at the financial management level, like NPV, like IRR, relevant costing, etc., etc., these concepts are actually taught at this management accounting level. And then you move on to the financial management, where you study a lot of things and you develop on the basis of those things at this advanced financial management level. Now, I'm going to discuss about the relationship between financial management and advanced financial management, and also about this SBL, but a bit later with the SBL. Right now, let me discuss about the financial management. The first thing that you actually need to understand is that when we talk about the ACCA financial management, which is commonly known as F9, so you have got various section at the F9 papers. And amongst the various sections, there is this one section which is about working capital. There is other section which is about the sources of finance. Then you've got another section which is about the business valuation. You have got the cost of capital. In fact, cost of capital is part of the sources of finance. You've got the investment appraisal. There is another topic which is about the risk management. Now, let me explain to you people that it's only the working capital that is not there in the AFM paper, but otherwise all of these areas, which is sources of finance, business valuation, investment appraisal, risk management, everything that you have studied at F9 level, it's actually examinable at this P4 AFM level also. Now, I'm going to connect these four things with the various areas, with the various aspects of this paper also. But let me first actually explain to you that these are the four areas that you have studied at the F9 and they're connected to this AFM. Now, how is there a connection with the SBL? So I'm going to explain to you that how the connection with the SBL actually is established is basically when it comes to the advanced financial management. So a lot of things that you study is that you talk about the business risk, you talk about the financial risk, you talk about the investment decision, you talk about the valuations of the business, you talk about mergers and acquisitions. Now, all of these things, just like they've got a financial side, they also have got a side which is basically a more of an analytical side, a more of a reasoning side. Like if I'm actually investing in a business, so I've calculated the NPV to decide if this business is going to be viable for me. But there are other factors that need to be considered also, that whether the competition in the industry in which I am going, is this competition going to let me survive or not, whether there is ample amount of growth opportunity available in that industry or not, or would I be just restricted to that specific one single investment. If I'm acquiring a company, would I be able to acquire the company? Would I be able to manage the cultural issues? Would I be able to manage the cultural conflicts, etc., etc., etc.? So a lot of things that you actually study at the SBL level, those things are also applicable at the AFM level. Now, if somebody is going to ask a question that I have not taken FM, the financial management, so should I take AFM? The answer is going to be no, big no. Why? Because if you have not taken financial management, how can you go on and attempt the advanced financial management? You cannot do it. But in case if you have not attempted SBL, you can still attempt advanced financial management, because a lot of theoretical aspects that you studied at the SBL level, those theoretical aspects are also discussed at the advanced financial management syllabus. And while teaching, we also as a tutor explain to you those concepts, so you don't actually have to worry about it. So it's all actually there, so you don't have to actually worry about it. So this is how basically the connection of advanced financial management is with the other papers. Now, before I go on to approach to examining of the syllabus, I would first of all discuss about the syllabus structure, and then I'm going to move forward. You could see here that these are the various syllabus sections that are there, and you could see that there are these 5 syllabus sections: 1, 2, 3, 4, and 5. I'll discuss each one of the syllabus section in details, but first of all, let's have a look at this. So what you could do is that when you look at this specific area of the syllabus, so you could see that there are these 5 aspects, and what I would say is that these are the four core aspects of the syllabus. These are the four core aspects of the syllabus. So if you have actually studied the investment appraisal at the F9 level, that investment appraisal is built upon into the advanced investment appraisal. You have studied the business valuation. That business valuation is developed into the acquisitions and the mergers here at this P4 level. The sources of finance have been studied. The cost of capital have been studied at the level of F9, and this is developed into the corporate restructuring and the corporate reorganization. We do study the basic currency and the basic interest rate risk management at the F9 level, and they're developed into the advanced technique of the treasury and the advanced risk management at this specific P4 level. So when we actually talk about this P4, so remember that the F9 knowledge is an essential knowledge, is an important knowledge that you should know before you are able to attempt the P4. Now, a lot of you people would have attempted or would have passed the F9 around a year ago, or maybe 1.5 years ago, or maybe 2 years ago, and you would have forgotten everything that you studied at F9 level. So how would you be able to tackle it? Because you would be having a question mark that how would I be able to tackle? I've almost forgotten everything that I studied at the F9 level. I don't even remember that what a weighted average cost of capital is. I don't even remember that how do we calculate the cost of equity. I don't even remember that what types of scenarios could come into the NPV calculations. So you don't have to worry about it, because my approach and my strategy is that whenever I teach the AFM paper, my first objective is that whatever topic that I go through, I try to have a recall of the F9 level knowledge first. And once I have actually recalled the F9 level knowledge, then I actually go forward. So you don't have to actually worry about it. Now, what I'll do is that I'll have a bit of a detailed evaluation of the syllabus. I have not discussed about the section A up till now. I'm going to discuss it a bit later. But let's actually have a discussion about the other section in a bit of a details. So when we talk about the investment appraisal, so the majorly techniques that we have studied at the F9 level, they include the NPV, they include the IRR, they include the payback period and the discounted payback and so on and so forth. These are the basic techniques that you've actually developed. Now, are these basic techniques examinable? Yes, but in a bit of a complex scenario. Plus, you've got other techniques which is like adjusted present value. You've got other technique which is like modified internal rate of return and so on and so forth. So there are multiple techniques that keep on developing with respect to and the subsequent development happens. Then there is this option pricing theory. That's a very important theory. There is a model which is called Black-Scholes option pricing model. You do listen to this name when you study SBR, IFRS 2 share-based payment transaction. So whenever we study IFRS 2 share-based payment transaction, we usually listen to this name, which is Black-Scholes option pricing model. So this Black-Scholes option pricing model is one of the real-life option pricing models, which is applicable to the investment appraisal decisions, which we are going to discuss. And one of the important aspect is the international investment and financing decision. Up till now, if you were a UK company, you were having an NPV calculation in pound sterling. But now you are a UK company and you would be having an investment decision, maybe in South African rands, maybe in Swiss francs, maybe in US dollars, and maybe in Aussie dollar. So there is actually going to be an international investment decision which you would now be taking. So we would actually be going through those investment decisions and all also. So that is also going to be something that would happen. Then if I move forward, so there is actually going to be the acquisitions and the mergers scenario. Now what exactly do you mean by this acquisition and the merger scenario? So you do understand that there are two ways of growing a business. One of the way is you grow the business in an organic manner, which is slowly and gradually over a period of time. The other option is you don't go for the organic way of growing the business. Rather than this, you go for the acquisitions. Now, when we talk about the acquisitions, so the acquisition is a way, is a method through which you grow your business on an immediate basis. It's a method, it's a way through which you grow your business on an immediate basis. That's one of the ways. There are few advantages of the acquisitions. There are few disadvantages of the acquisition also. There are issues that you need to consider with respect to the acquisitions, which is what should be the value, and at the same time, what should be the problems that would arise with respect to this acquisition. How exactly are we going to finance this specific acquisition? So there are various decisions which you have to take as an entity whenever you take these acquisition decisions. So when we would be discussing the acquisitions and the acquisition and mergers would cover up all these aspects, the advantages, disadvantages, valuation, financing issues, problems of acquisitions and mergers, etc., etc. So these are the various things that you would actually be discussing. Now, so that's what the acquisitions and the mergers is, and that's also an important area of this P4 syllabus. If I move a bit forward and if I try to discuss further, what's the next thing that we need to understand? The next thing is basically the corporate restructuring and the corporate reorganization. Now, what exactly is this corporate reconstruction and reorganization? If you could look at it, there is basically a financial reconstruction, there is actually a business reorganization, and that's what it is. Now, let's try to understand what a reconstruction and a reorganization is. For example, you've got a business which is presently running in financial crisis. I'm repeating it again. For example, you've got a business which is presently running in financial crisis. What choices do you have? One of the choice is you liquidate the business. One of the choices you liquidate the business. The other choice is you basically go for restructuring. Now, what exactly do you mean by this restructuring? So let's try to understand this. Now, your financial crisis could be because of multiple reasons. Your financial crisis could be because of multiple reasons. Now, what could be the multiple reasons your financial crisis are? Because of the loans that you have obtained, because of excessive number of employees that you have on board, because of loss-making contracts that you have entered into, because of maybe the non-availability of the finance. There could be multiple reasons which could actually put your business into crisis. So now, if a business is into crisis, so what are we going to do? If we don't do anything, we would ultimately have to liquidate. But if we don't actually go for liquidation, then the alternate option is to go for restructuring. Like a lot of countries, what they do, a lot of companies, a lot of countries, what they do is that when they are faced with a problem, they go for this restructuring. Now, let me talk about this. With this specific corona effect, so COVID-19 effect, what has actually happened is the companies, they've gone for a very different type of restructuring. Now, what is the different type of restructuring? Firstly, they've applied to the bank that we cannot pay your interest. They've applied to their banks that we cannot repay your installments. They've applied to their banks that kindly issue us restructuring of the loan and reduce our interest and etc. We will not be able to pay a single penny. Number two, they've applied to the governments, help us out or else we're gonna end up. So they've applied to the governments for the bailout packages. They have communicated to their employees that you won't be getting salary for April, or you may be getting a salary which is 50%. You may be getting a salary which is 30%. You may be getting a salary which is 40%, so on and so forth. There could be multiple things that the companies they have done. They've talked to their suppliers. We won't be paying you. No, we can't pay. They have actually discussed with their customers that, okay, how about if you make us a payment of, let's say, 50%, 40%, etc., etc. So the companies, what they have done is they have actually entered into changing a lot of contract. For example, if you were having a binding contract with somebody, you can't honor that contract anymore, because the reason is the situations are not such, the conditions are not such. If I talk about developed countries and if I talk about developing countries, what has happened with developed countries is that the governments are funding the businesses. But when it comes to developing countries, the governments are unable to fund the business because they don't have ample amount of money. The governments are already in debts. So what are these businesses going to do? They don't have an option except for applying to the bank that we can't pay, applying to their landlords, we can't pay, applying to their employees or requesting their employees, okay, we're going to pay, but we're going to pay with a delay. We're going to pay, but we're going to pay 50%, we're going to pay 25%, we're going to pay 70%, etc., etc., etc. A lot of things have actually been taken place. So now, when we talk about the restructuring, so restructuring or reconstruction could be financial. It is actually a change to the way the business is financed. It's actually bringing about a change to the way the business is financed. So I'm talking about it that the restructuring could actually be financial. It's actually bringing about a change to the way the business is actually structured. It's actually bringing about a change to the way the business is financed. That's what a financial restructuring is. The next thing is basically business reorganization. Now, what is this business reorganization? So let me explain to you. At times what happens is you have got various subsidiaries, or you've got various segments which either are loss making or they are actually non-controllable. There could be loss making segments, there could be non-controllable segments. Now, what exactly do you mean by loss making segments? What exactly do you mean by non-controllable segments? So let's try to understand this. Basically, when we talk about this loss-making segments, or when we talk about the controllable, those segments which are non-controllable. So I'll give you an example. We had a company here in Pakistan. The name of this company is ICI. There is actually a chemical which is used in textile, and the name of that chemical is PTA. No company used to manufacture this chemical in Pakistan, and it was always imported. And the import was actually at a very high cost. So what ICI they did was, they actually set up a subsidiary, which was 100% owned subsidiary, and that was for the manufacture of PTA chemical. Now, when they actually installed that factory for the manufacture of PTA chemical, and that was a 100% owned subsidiary, unfortunately, the manufacturing of PTA was a very technical issue. And when the manufacturing of PTA was a very technical issue, they unfortunately could not handle it. The result was that this PTA plant actually used to give them a gross loss. This PTA plant used to give them it's not net loss, it's a gross loss that the PTA plant used to give them. So what did they do then? So what they actually did was, I'm going to tell you that what was the impact on ICI. In Pak rupee terms, ICI Pakistan's share price was 135, And just because of this PTS gross losses over a period of 2 years, the share price went down to 11 or 12 rupees. It was 135 rupee park and it turned out to be 12 rupees. That's what the share price went into, because what happened is the company used to consolidate this subsidiary, and after the consolidation they were literally left with nothing. And if they were left with literally nothing after the consolidation, so they actually were in a bit of a problematic state. So what did they do? They decided that we can't handle it. We can't handle it. They decided it quite late, but they decided it that we can't handle it. So ultimately, they actually disposed of this entire subsidiary. Now, this specific decision is a business reorganization decision, because you were actually into a business of manufacturing PTA. Now you're not into the business of manufacturing PTA anymore. You have actually discontinued manufacturing PTA. So if you have discontinued manufacturing PTA, so that means it's a change that you are bringing about to your business, and the change was for the betterment. The change was for the increasing of the business value. The change was for the improvement of the value provided to the shareholders. That's what the major objective of the change was. So that's why the change was actually implemented. So this is how the corporate reconstruction and the reorganization operate. And what we are actually going to be doing is we will be discussing in depth that how a business undertakes financial reconstruction, how business undertakes business reorganization, what are the different types of reorganization, what are the different types of reconstructions, and so on and so forth. So we would keep on discussing it over a period of time in detail and in depth, and we'll do as many questions about them as possible. Now, let me explain to you something which is basically this section B, the advanced investment appraisal, this section C, acquisitions and mergers, this section D, which is the corporate reconstruction and reorganization. What is actually going to happen with these three is that there is a basic knowledge which is called weighted average cost of capital. There's a called basic knowledge which is called weighted average cost of capital. Now, when we talk about the weighted average cost of capital, so what is actually going to happen is that this weighted average cost of capital knowledge would be applied in this questions, in the questions pertaining to the mergers and acquisitions, and in the questions pertaining to this advanced investment appraisal, and in the corporate reconstruction and reorganization. And what I can guarantee you is that if you have got a good knowledge of WACC, if you could actually deal with the various variants of the WACC, so you are gonna score at least 15 marks in the examination. You're at least gonna score 15 marks in the examination, because 15 marks approximately lie in this specific scenario, in these specific portions. So approximately 15 marks lie in these specific sections of the syllabus. In fact, the application of WACC. Now, lastly, there is this next area, which is the treasury and the advanced risk management techniques. So it's basically when we talk about the interest rate risk management, we talk about the currency risk management. So with respect to all of them, the interest rate risk management, currency risk management, what actually happens is that these are actually the risk management technique that we are going to discuss. Because when it comes to interest rate risk management, we have only discussed FRA. But here we are going to discuss the futures, we are going to discuss the options, we are going to discuss the swaps, we are going to discuss collars, etc., etc. We are going to discuss the various types of interest rate hedge contracts that we are actually going to be discussing here. When we talk about the currency risk, so at the F9 level, we mainly deal with the money market hedge, we deal with the forward contracts. These are the two major things that we deal with. And we deal with the theory of options, futures, currency swaps, etc., etc., etc. What we'll be doing is that we'll be discussing the computational aspects of these specific areas also. We'll be discussing the computational aspects of these specific areas also. So that's what we shall be doing. That's what we shall be doing. Okay, so these are the four important areas, and then I had intentionally not discussed part A of the syllabus. And why had I not discussed? Because now you are going to understand it a bit better. So basically, if you could just look at the list here, it says role and responsibility of senior financial executive of the advisor. Because what happens is that, try to understand, there is an agency relationship. It's the shareholders who have invested into the business. You acting as a senior financial advisor to an organization, you have a duty, you have a fiduciary duty of trust. You have a fiduciary duty of trust. Then there's this financial strategy formulation, that how is the business going to be financed? What is going to be the source of finance? Where exactly are we going to raise the finance from? The ethical issues that we need to comply with and the corporate governance things that we need to follow. Then if we deal with the international trade and finance, so how would we manage the international trade and finance issues? If we are operating in a multinational, how would the multinational issues be dealt with? And lastly, the dividend policies that would be dealt with multinational and the international transfer pricing. So this portion of the syllabus is actually some portion which is connected to every area. You would study risk management, some portion of risk management would be applied here. You would study the investment appraisal, some portion of investment appraisal would be applied here. You would study acquisition merger, it would be applied here. You would study corporate reconstruction and reorganization, it would be applied here. So it's actually going to be all of the syllabus areas are connected to it. That's why you could see this specific arrows. You could see these arrows which actually are indicating that this is how it is connected. So this is what the syllabus structure is. Now, how is the paper actually examined? How is the paper actually examined? So when we talk about the examination structure, so it's 3 hour 15-minute paper. With section A, 1 question of 50 marks, and section B, 2 questions of 25 marks each. 2 questions of 25 marks each. That's what the paper is. Is it easy to pass AFM? The answer is it depends. It depends. What does it depend upon? It depends upon you, and you. If you think of it as something very big, something very difficult, it will become very difficult. But if you think of this to be a paper which is manageable, then you will be able to manage it. You would not have many issues. Then you would actually not have many issues. So you need to understand, you need to keep this thing in mind, that it's something which is a manageable paper, which is doable paper, but there's something which you actually need to keep in your mind. There's something which is you need to keep in mind, that this is not 100% computation paper. The paper is a mixture. Paper is a mixture of computation. Paper is a mixture of theory. So you need to keep in mind that it's actually a mixture of these things. And what you would have to do is that you would have to make sure that you go through the theoretical portion of the paper. That's important. Now, what am I going to be doing with respect to the theoretical aspect? So I shall be providing you with the study notes. I would make sure that while attempting any of the exam question, I try to go through every single part of the theory of that specific question, because that's how you will be able to relate the theory to the scenarios, and that's what is majorly examined at this P4 level. Now, another important thing is that we were preparing for June. Now there is a change. We have to prepare for September, and now we can see that the ACCA website has got a different paper for September, different syllabus for September. So is there any change? The answer is there is no amendment to the AFM study guide. There is no amendment to the AFM study guide. It's exactly the same paper. There is no change. There is no difference that you would find with respect to the AFM. Now, one more question that you may have. So I'm going to answer it first. Then I will open the floor to you people so that you may actually open your own questions. That how are the classes going to be conducted? So they are going to be conducted in a hybrid manner. And what exactly do you mean by this hybrid manner of conducting the classes? So the hybrid classes means it's actually going to be a mixture of live plus recorded. It's going to be a mixture of live plus recorded. We will have at least, I'm saying at least one live class per week. And the rest of the lectures are going to be recorded. Now, my approach is going to be, I would actually be, initially I would be taking more and more live classes so that you get used to it. And at the same time, simultaneously, I'll be giving you recorded lectures also. But slowly and gradually, what is actually going to happen is we'll have recorded, we'll have reliance on the recorded sessions, plus we'll have live session every week. So like, for example, I may tell you that mergers and acquisition is what we are going to be going through. And I might actually go through one of the exam questions of mergers and acquisition alongside with you people. And then I can give you 2 exam questions of mergers and acquisition to attempt on your own. And then when we meet up in the next class, so we can go through one more mergers and acquisition long question. So that's how I'm actually going to operate. So that's what it is going to be. Now, how would we be able to access the recorded lectures? So for that, what I'm going to do is I'm going to guide you through that how these recorded lectures would be available to you. So basically, we have got our learning management system. You could actually, there is a website which is called escribiracademy.com. So when you will go on to this escribiracademy.com, there is actually going to be a login link. Now you would obviously be provided with the ID and the password. So there is actually going to be this login link. You'll go into this login link and you would input the ID and the password that's actually provided to you. I'm actually inputting one of the ID and password that belongs to us, that belongs to our college. So I'm just inputting that ID and password just to demonstrate to you people that how exactly is this all going to operate. So once you will go on to this, you will be actually, you are actually on this page, My Courses. So once you will be on your My Courses, so the courses that are being assigned to you, those courses would appear in your window. So now let's see if I click on this specific AFM September 2020 English, because there are already some pre-recorded lectures that are available here. So let's say there are various chapters. Let's say there is an introduction. You open this AFM introduction video, you start playing it. You click on the other chapter, VAC. There are various videos on the VAC which would be available. Then there's this bond yield. There are various videos, they will be available. Then there is this investment appraisal, various videos, investment appraisal advance, free cash flow, so on and so forth. So for example, if I just open up this one video, let's say, if I open up this video, which is reason for using APV, what is actually going to happen is that you would come up with this specific screen where the video would be available. So the topic that we shall start discussing, you can play the video. You've got the adjustment to the voice, just like any video streaming server has. You've got an adjustment to the quality of the video you wish to play. You've got an adjustment to the speed. Maybe you might be revising the topic. So you might increase the video to 1.25. You can go to the forward, you can pause the video, you can go backwards, you can do anything that you wish to do. So you would be provided with this specific access, and all the classes, all the pre-recorded lectures that are available would be available to you. Plus, whatever the live classes that we conduct, they would also be available to you. So this is what you have. This is how we would actually be giving you access to the recorded lectures. So that's all from my side with respect to the introduction of the advanced financial management. How exactly would I be teaching? How exactly would I be delivering? That's all from my side. And now you can ask any questions that you may have.